Hi there. I'd like to discuss a few moments on this short tutorial on decentralized finance, in other words, DeFi, and discuss about its key components, what are the type of products we're seeing in this space, how it works, and importantly, its potential to reshape the financial landscape. Because as of today, DeFi is the main use case for blockchain technology. So let's get started. So just let me start off with what is decentralized finance. DeFi is a financial system built on blockchain technology that operates without a traditional financial intermediaries like a bank or a brokerage. So by leveraging what we call smart contracts, DeFi provides financial services such as lending, borrowing, trading, and earning interest. The attributes noted on the right of DeFi, so it's permissionless. This means that anyone can access and use DeFi services without needing any sort of approval or meeting specified criteria. It's decentralized, as DeFi operates on a distributed network of computers called blockchain, rather than being controlled by a single central entity like a bank or institution. It's trustless, in that transactions and operations are automated and governed by smart contracts, eliminating the need to trust a central authority. It's also transparent in that all transactions and smart contract operations are publicly recorded on a blockchain, allowing anyone to verify them. It's also censorship resistant in that DeFi platforms cannot be easily shut down or censored by governments or central authorities, ensuring continuous access. And finally, it's programmable. DeFi applications can be customized and automated through smart contracts to perform complex financial operations. So let's take this typical scenario where we have the traditional financial system at the very top here and the decentralized financial system equivalent of that. So we all know that in the traditional analog world, we as a sender, we usually send, before we initiate transactions, you need to perform what we call KYC, know your customer, and AML, anti-money laundering checks before you actually, in order to set up your account in the bank. And also they have to approve and perform the checks and balances that you are who you say you are, you're legitimate, you have a certain credit rate scoring before you even open an account, or even when you apply for a credit card like Visa or MasterCard. So let's take the case that you've been through all of that in the traditional system. You're about to send a transaction. You send it through your bank, and if it's using a credit on a credit card, for instance, you need to then send that off straight to those credit card issuers. And between each of these elements, they incur some fees, transaction fees. And on the receiving end, once you make a payment to a merchant or to an end user, the receiver in this case, it has to go through the bank as well on the receiver side before the actual receiver receives the credited amount in their account. So you can appreciate that it's a very elongated process. There are very lead times involved in each of these steps, and transaction fees, typically 2 to 3% in the case of credit cards. And also in terms of settlement clearing, it happens within several days. It's not something that happens instantaneously. Right, now in the actual decentralized world, it's much more succinct, it's faster, there are less parties involved. You don't have a bank in this case because it's on the decentralized blockchain. So it's just between you and the receiver. There are no intermediaries involved. It's just yourself. You send the transaction on the blockchain and the receiver simply receives the transaction in a matter of seconds and minutes. And there are no KYC checks involved, no AML checks involved. There's no lead times. It's permissionless. You need to ask permission for a bank to open up an account before you initiate transactions. So you can see the working practices between the two scenarios. Let's go into, what are the type of DeFi products that we see here. So DeFi platforms really are about using blockchain technology to enable peer-to-peer transactions between two parties, the sender on the one hand and the receiver of a payment or a transaction. So smart contracts, what are they? There are automated contracts that execute transactions when predefined conditions are met. Decentralized exchanges that you see here, in other words, DEXs, these are platforms where users can trade assets without intermediaries. These are usually, when you trade or swap one crypto token for another, let's say from Ethereum to Bitcoin or Bitcoin to Tether, which is a stablecoin, and so on, at a fee. Lending and borrowing. Users can lend their assets to earn interest or borrow against their crypto holdings. So this is a way of earning money. It's what we call staking. This process is around staking. You stake a handful of your crypto holdings on your wallet, and you're prepared to lend it out. So in other words, you're prepared to lend a decentralized exchange platform to lend out your crypto at a certain interest payment as a return of that. And that's actually what you're farming and staking. One other thing, stable coins, again, they are decentralized, and they're just really cryptocurrencies that are pegged to a stable currency in order to reduce volatility, like a US dollar or a euro or a pound or a yen, depending where you are. And you can see this list of DeFi products is growing as there are more actors and there are more demand for these type of services in the decentralized finance blockchain. So this one talks about an example of a stable coin. This is one of the most known stable coins out there. It's called DAI, D-A-I, and it's actually pegged to the US dollar. And the company behind this is called Maker DAO. So what is their intention there is to become like a decentralized reserve bank. So it's like a central bank where they issue these DAI tokens, stablecoin tokens, that is pegged to the US dollar. So that's an example of where stablecoins are competing with the central banks as we know it in the analog world. Uniswap is an example of one of the most well-known distributed exchange out there. So you can think of this like an ordinary centralized exchange where we trade mostly goods between two parties. Well, in the decentralized world, they provide automated market making functions. So the essence of this is simply trading purposes. That you want to swap one token for another, and they earn a swap fee or transaction fee as a return of that service. It's no different from what we know as a centralized exchange out there. And Uniswap is one of the leading software protocols for decentralized or distributed exchange platforms. And these DEXs, platforms, decentralized and is managed by a software company that runs them on the blockchain. So you see an awful lot of DEXs out there, and is growing by the day, right? So in a traditional exchange, like I said, you have a single institution that provides liquidity using an order book to match buyers and sellers. Well, this is no different. The DEX performs the same function, but in a decentralized fashion. Compound is another interesting one. This is a lending and borrowing platform. So you simply have what they say here, tokens in your cryptocurrency wallet that you're willing to lend out to others, and you earn an interest in return. So Compound is one major company that has one of the most majority of collateral lending platforms in the decentralized finance. It's like a bank, really. You lend out your money, act as a loan for others, and in return you get an interest. So this is no different. Distributed Autonomous Organization, in other words, DAO, they usually foster transparent and democratic governance, while DEXs enable secure peer-to-peer trading and liquidity provision. So you need to have what we call DAOs, usually just for governance. So just a management layer that takes care of the democratization and governance over these various types of DeFi products, whether it's a DEX or whether it's a lending and borrow like Compound and Aave, when they're lending out tokens as collateral for others to use and borrow. Uniswap is just a protocol, and it needs to be voted by DAO. Things about how many tokens you give out to users who hold those tokens, that is voted by a DAO, and it's governed by them. I want to just touch on the growing list of what we call decentralized applications. These are the DeFi products. Decentralized applications, they serve different purposes, and in the world of DeFi, you can see you got the Maker, which is a lending platform. Compound, I've talked about, is a decentralized application example of a lending borrowing platform to other users, crypto users. Uniswap, as I said, is an example of a DEX for exchanging and swapping one token for another. You have Aave, which is another competing lending platform to Compound, as I've covered. Curve Finance acts as both a lending and DEX, and you have some others listed out there, which I won't dwell on. Right, so just as a rounding comment,
Besides what's noted here, it's true that there's a lot of hype around Bitcoin, Ethereum, and non-fungible tokens, similar to how the dot-com internet bubble. And it's true to say there are many companies and ideas will not survive, but the core technology and the decentralization thought process is here to stay. As a summary, it uses blockchain technology and it's continuing to evolve. DeFi would likely see increased adoption and innovation in the coming months and years. There's also going to be need for improved regulatory frameworks, right, in order to govern DeFi, to provide more clarity and protection for users of the DeFi system. DeFi has the potential to create a more inclusive and efficient financial system, which is accessible to everyone. This is the main benefit.
So that's it for today's episode. Hopefully you've enjoyed it. Just a word of caution. There are several DEX platforms that are being rolled out in the DeFi world. You've got to be wary about them because the majority haven't been approved by the local jurisdictional financial regulators. I mean, take the example of FTX. They've blown out and committed fraud precisely for the reason that they haven't been approved by the regulators. So you got to do your own research just to make sure that you navigate which ones are approved and which others aren't, because there's a lot of file suits that's been raised by the regulators, and some they've perfectly defended against them and subsequently proved themselves as legitimate DEXs platforms. So just be mindful about these. If you liked today's episode, please hit the like button. And if you haven't done so, please subscribe to this channel, as I regularly post some interesting videos that could be of interest out there.